The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the Friday, October the 13th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now is just fine, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got the Dow trading up 47 points, 22,887 is what she is printing at. We got the S&P up about 6 points, NASDAQ 100 up 27 points. That's about 0.5% to the upside. Semis are up 0.75% to the upside. That's $9, trading out at 12.20. You've got the trannies down 58 points, nearly 0.6% to the downside. VIX down 36 pennies, or 3.5%. Gold's up $7, silver's up 11 pennies. Light sweet crude is up 60 cents. Leading the charge here to the upside dollar-wise, it is Everest Real Estate Group up $16 or 7%. Mount Everest. You've got Priceline Group up 14, Alliance Data Systems up 13, Google's up 8, Chipotle's up 7, AutoZone is up 7. To the downside, it is Applied Optoelectronics down $12 or 20%. Lending Tree off nearly $10 or nearly 4%. Little Fuse has lit its fuse to the downside, down 3%, $6.50. Procter & Gamble down about $6. First Rep Bank is off $5. Domino's Pizza off $5 as well. Of course, I think they sell their pizzas for $5 buckaroonies. Of course, I want to look at what you want to look at. Hey, there were a couple of emails that came in late yesterday. I didn't see them. So let's go take a look at those. Let me remind myself, what were those? That was Phil. Phil wanted to take a look at ticker symbol IOTS. So let's go put that up on our screen. See what we've got out here for Phil. That is a Desto Technologies. And the question was, I believe, where would you buy and where would you go ahead and place your stop? Now, why is the market profile in the daily time frame not turned on? Well, it's because I didn't have the switch turned on. So as we take a look at this daily, weekly, center box out here is going to be weekly. Left-hand side, very right-hand side, I'm sorry, is going to be the monthly. We can see the move of a move out here. That's where you get back to a prior swing point on a monthly basis. That takes you back to December 2015. About 1.6 million shares there. Last month, as you came into it, 5 million shares. So that's a beauty. Price might try to take that level out, but it hasn't just yet. So it's just a test. It is a test on much larger volume. It's only October the 13th. You're already at 1.8 million shares out there. With regard to where could this pull back to, Phil, I would have to say, look, your ideal buyout here right now would be $7.08, between $7.08 and $7.25. That happens to be the bottom of the TAS daily profile. Will price get back there since it's above the top of the box, which is $7.95? I don't know. But there's a possibility, since you've got that move, and you were asking, hey, where do you put your, where's your entry price? I would say on this equity, that would be it. Now let's take a look on Stevie's other chart, see if there's any other patterns out here. IOTS, again, is a ticker symbol. Other patterns, is it moving higher, doing less relative energy? Is it wave number 7 to the upside? And the answer is no. Neither of those actually show up on our screen out here. So I'm going to simply have to go with utilizing 708 at the moment. If it gets back down there, then your stop should be, take a look at the average true range. One easy way to do that is I can actually put that on this chart out here, and give me a moment to add that just simply to this for you. And what we're going to do is we're going to take a look at the average true range. Now, typically, if your system has that, the typical default is 14 days, 14 trading sessions. I say change that to 10. Just take a look at the last 2 weeks. In this case here, it's 58 cents. So your stop would be 1.618 because you would use an expansion, a Fibonacci expansion. I like using that 1.618 times 58 cents. That would be your stop. That would be your calculated stop. For our purposes right now, let's just say it's 60. So that makes it about 90 cents. We'll just round it up to a buck. $2 Chuck, although this would be $1 Stevo. And you would just simply take 1% of your working capital. Let's say it's 100 grand. 1% is going to be what, $1,000? Take 1,000, divide it by your stop. That would be a buck here. That is how many shares you would buy. Your stop would be that dollar below your entry point out there. That is how I would take a look at it. So, Phil, thanks right in. Sorry that we weren't able to get to you yesterday. We had Tim right in. He wanted to take a look at Akamai. Is that how you pronounce it? AKAM is the ticker symbol. Let's go ahead and move that average true range down here to the bottom. You'll see inside of Akamai or Akami or Akam somebody, it's 76 cents out there. Now, Tim was looking for, I didn't write it down here. I think it was an entry price, Tim. That's what you were looking for out here. A nice entry price on this is going to be around, I would have to say, 49.70 would be one spot to take a look at it. If it gets below 49.70, well, then I don't know. Let me go put Akam somebody on my other chart out here. Let's go see what kind of bottom this made out here. Is there anything that shows up on our screen? Well, I will tell you what. You actually got your buy signal here inside of Akamai a couple of days ago. Well, actually, your first buy signal came in on the trading day of September 29th. Now, we say that, Tim, because what we're looking at out here is we're looking at the price oscillator. That's the very bottom portion of my screen. That's the difference between two exponential moving averages. In our case, it is the 39 and the 19 period. Again, we're looking at a daily chart. So in this case, 39 and 19 day price oscillator. And what happens is when that price oscillator gets to the zero level, typically what you will see is you'll see price and Stevie's red line, the oscillator and change line, catch up with each other, which is really what took place on the trading session of September 28th as well as September 29th. When you reject that level, as you reach in the zero area, that tells you you now have a rising price oscillator above zero. And that is a beautiful thing. The question, Tim, is how is this going to handle the gap to the downside on July 25th out here? Let's still go with 49.70 as your entry price right now. But you're in an area where there could be some agitation, not caused by me, caused by all those sellers. Steve Rhodes with TFNN. I'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you doing today?
I'm fine, Steve. How are you? Long time no talk to.
Yeah, I'm doing very good. Nice to hear your voice. And you're calling about and trading the financials of the financial sector, the XLF. So tell our listeners.
I'm curious to know what you think of the financials, and then I'm on the same question is going to be about the NASDAQ in general. But let me start with the XLF. What do you think of the financials, particularly in the wake of all the earnings that have come out in the last day or two?
Well, so if we take a look at the financial sector, the XLF, we look at it on the daily, the weekly, and the monthly. Let's just simply start with the monthly chart and give you an idea as to where price is headed to, which it should be kind of a simple conclusion that it's heading back to its highs from back in 2007. When we take a look at this monthly chart, probably the area to focus on the most is the July 1st, 2015 high. That's our B point of our A to B equals CD to the upside. That had 787 million shares. Now, when we see a swing point or a B point of an A to B equals CD, we like to see that pass with wide price spread accelerated volume. You've heard Tom talk about that for umpteen years out there. Well, if you take a look at the month of November 2016, well, there it was, 2 billion shares. Wide price spread, because that was probably the widest ranging monthly bar that we saw. So, Mark, what that does, that gives us a 1-to-1 price projection of 31.06. The actual all-time high out here is 30.97. Now, based on the move that we have seen since July of 2015, meaning it's been stronger than the move off of the 2009 low, the A to the B point out here from July of 2015, this suggests to me that we're going to see more than a 1-to-1 A to B equals CD. So if you're asking me, what do I think about the financials? I believe that the XLF over time is on its way to at least 35.42. That's what the monthly chart is communicating to you and I. And the larger time frame is going to provide us with more information. If we pull back to the weekly chart out here, it's above all weekly profiles. The last weekly profile was at 24.19, and we got above that the week that began September 11, 2017. The highest swing point at that stage was in August, which had 260 million shares. That was passed last week with 267. So, yeah, this has got some nice volume in it no matter which way we look at it. The question is this going to go ahead and pull back? And it has pulled back to the first level of support, which on the daily time frame mark is the top of its daily market profile, which is 25.90. If it were to close inside there, and there's nothing to indicate yet that that would occur, then you would be looking at support of about 25.61 if you were looking to get in on this trade out here. Is that going to happen? I wish I knew. Today is the first day, yes, the second day, where we've seen price move below what I like to call my red line, the oscillator unchanged line. That means we now have a falling price oscillator, but above the zero line. So it does suggest there's that possibility of getting back to 25.61. That possibility will be negated if price were to close above 26.26 today out here. So that's what I see when I take a look at the XLF. How does that help you, or what other questions would you have?
I'll have to go and digest all this. So that's a lot of figures, but that's interesting. Okay, we had some of the banks came out yesterday with some pretty bad earnings, and it took a pretty good hit yesterday. So I was wondering if we were going to have some follow through, or if that was a one day or one off kind of a scenario.
So the cool thing about these market profiles, these horizontal, invisible, except for those of us here at TFNN, invisible levels of support or resistance, it actually did have the follow through to its first level of support, which is the top of this box. Now, this box here that formed was actually a bearish structured box, but you can see that it actually formed here on October 5th. Now, the reason why I say bearish structure is because the center line, which oftentimes is not in the center, in this case here, it was closer to the top versus the bottom. That tells you that really sellers should be in control of that price area if price can ever get back there. But when you see a box form below price, it tells you it's actually a very bullish signal. So price came back to the top of that box and rejected it today. So that was your follow through. There was price moving down to support. It will not surprise me to see price continue to move higher out here. It would be a gift at this stage of the game to see 25.61 tested. Now, that's the entire sector out there. And, there were a handful of stocks that reported yesterday. But if we look just at the XLF, not its components or anything, it's headed higher.
Okay. Thank you, Steve, for that. And
yeah.
I was wondering what you think of the NASDAQ. It's probably the same question.
Sure. So the NASDAQ is a bit of a different story. If I take not the NASDAQ 100, but the NASDAQ composite. And what's interesting here about the NASDAQ composite, this now is going to be potentially the second day in a row where I'm taking a look at the advanced decline issues, and I'm looking at the oscillator. The oscillator is measuring the difference between two exponential moving averages, 19 and 39. And what that has been doing is that has been falling ever since the date of October 2nd. Yet that's on a closing basis, and on a closing basis inside the NASDAQ composite, price has been moving higher. Well, if I pull this chart back a little bit further, when you have price moving higher and a declining tops in the advanced decline oscillator reading, plus we're below zero, this is actually communicating to me that sellers are in control. Very subtly being communicated, because we're seeing prices at a new all-time high as we speak today. The NASDAQ composite, as we speak right now today, Friday the 13th at 1:24 in the afternoon, is absolutely setting up for some type of pullback. Doesn't mean that it's going to go take out the swing point out here from the trading session of September 25th. And unfortunately, Mark, it doesn't tell you and I if that's going to start today or if it's going to start Monday, Tuesday, or not at all, because it can resolve itself. But as we speak right now, the NASDAQ composite is communicating to you and I that it, in fact, wants to go ahead and pull back out here. That's what I see. If it's the NDX 100, and if I go and take a look at... So what questions do you have about the composite while I start looking for something else out here?
I was just asking in general. The reason why I ask a lot of this is I know I heard part of you with Tom earlier in the week on his afternoon show.
Yeah.
and you were pretty bullish on the market in general. So I was wondering what you thought of both the financials and the composite. Tom has been talking recently about how there's a lot of the FANG stock that he thinks are very, very that are about ready to make a correction. And he talked about Apple and Google and some of the other stuff. So I always wanted to get your take on that.
So let's look at the NASDAQ composite, perhaps one of the easiest tools that you and I can use, especially when things are up at new all-time highs. Doesn't have to be there, but when it's at new all-time highs, we start looking for other patterns that are out there. So on this chart here, Mark, I'm taking a look at the QQEW. That's the equal-weighted ETF for the NASDAQ 109 stocks that are out there. It thus far has not taken out its highs from October 6th, whereas the QQQs has. When there's a divergence between the equal-weighted and the weighted ETF, it's equal-weighted that is really telling the story. This right now is also telling us a story that we should see a retracement. You can hold on through this break if you'd like.
Sure, I will. Thank you, Steve.
Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with Mark in Concord, Massachusetts. We're taking a look at the NASDAQ 100, the QQQs out here. So I gave you my take on that. What questions do you have on the Qs out here?
Really nothing except for what I said earlier, that, there's been a lot of discussion. Tom's pointed out several times that some of the individual components have started to make their way down. And it seems to me that the biotech, the IBB, has been one of the sectors helping to hold up the NASDAQ, both the NASDAQ 100 as well as the NASDAQ comp. And so it seems like we have the computer technology stocks trying to take it down, and maybe the IBB and maybe the stocks also, the semiconductors, trying to keep it up. I know that Tom was talking about that in his seminar a week or two ago up here in Boston.
Okay, sure,
about
sure.
the stocks. And so I just wanted to know what you thought of that, and just in general.
Yeah, so the IBB, as an example, Mark, it's made the classic type of topping pattern, and it confirmed that back on October the 10th. And when I say classic, that's when price moves higher. My system automatically draws these lines based on specific parameters that I've given it. And so it starts to draw these lines, and when the cavalry arrives, which in this case here would be a bearish reversal signal, that was the bearish engulfing on October the 10th, that was our signal that the IBB was ready to retrace. Now, retrace to where? What you can also notice on this chart is you'll see the TAS market profile as well. Here you happen to see the center line box, which is blue, the top, which is red, and the bottom, which is black. And this is a bearish structured profile out here. So this suggests to me that the IBB should pull back to about 329.27. Doesn't tell me whether it's going to break through that level. Just tells me that that is the likely area, because sellers should be in control of this price area. Now, if price were to ever close back above 341.03, when I say ever, I'm not talking years from now. I'm talking over the course of the next, let's say week or so. That would just tell you how strong the move might be. But this should just be a normal, natural retracement back to about 329.27. That is in the IBB. If you take a look at some of the strong components, let's say Apple, AAPL out here. Let's just go see what its chart is communicating to you and I. Apple should be slowing down here with regard to its price movement. And the reason that I say that is its price oscillator is still just slightly below zero. So it's approaching the zero line. I don't know if that's going to take place on Monday, on Tuesday, on Wednesday, but it should take place in the very near future, meaning the price oscillator gets up to zero. When that happens, we should see price and my little red line catch up to each other. Doesn't give me the day, just I know the pattern, and that should occur. And if, in fact, price rejects it, meaning it tests that red line, moves higher, then Apple will be set to run all the way back up to its highs out here. Right now, that's what it looks like to me. But likewise, I really won't know until we see that test. If price closes below my red line as we get to the zero line, that tells me price will go back and test the 150.34 type area, somewhere right around there. So that's what I see in the IBB. That's what I see in Apple. And it makes sense, maybe that this would also continue to pull back a bit, or at least just go sideways out here. But so far, the NASDAQ composite signaling to us that it wants to do a retracement. The NDX 100, the same. The XLF long-term wants to keep screaming higher. You should be looking for places to enter the XLF. And I also would say you should be looking for places to enter the long side of the QQQs of the NASDAQ. It's going to 8,800, 8,500, and you are at 6,000 today. So that's another couple thousand points to the upside out here, longer term.
So you think we'll have a short-term correction or a short-term pullback and then a longer-term run?
I think we have I won't call it a correction, because a correction for me would be about 10%, and I'm not going to forecast that. But over the long haul, look, we're in a very favorable seasonal cycle between now and the end of the year, now and the early part of January. So any retracement is going to be a gift out here. But over the long haul, it has its measured move, which gives us a price target of about 88.38. The semiconductors, which you mentioned, they're headed all the way back to their all-time high, 1362 and higher, probably 1487, maybe even higher than that. But, I wouldn't be trying to short either of these two. They're just super strong. That's my take. That's my take.
All right, Steve. Thank you very much.
Hey, my pleasure. Thanks for calling. Always good to hear your voice. That was Mark you bet. That was Mark in Concord, Massachusetts. Let's see, what else do we have out here? I'm going to just check the cell phone, see if there were any emails that were sent in. I see the pharmacy is called, so that's a good thing. I had to go get a. So we got, anyways. You don't want to hear about my sorry troubles. This is from John. Hi, Steve. Do you see these oil stocks going up or down? And there's a few of them. So let's go take a look at those for Johnny in Sarasota. First ticker symbol here is AXAS. I'm not familiar with that, but we're going to get for that's a Abraxas Petroleum Corp out here. And I'm just going to throw this up, at least on my other chart, just so that I can even more quickly see if there's anything that I can detect. So the question was, do you see these oil stocks going up or down? Okay. In the case of Abraxas out here, if it does pull back further, what I would be looking at out here, John, if you're looking to buy, is between 173 and 181 out here. If it closes above, I'd say 193, and you're at 191 as we speak right now, then it's probably ready to go. Not probably, it's ready to go back up and test these high volume highs that it has out here, which is from the trading session of September 27th, and that's in the $2.10 range out here. Longer term out here, this probably struggles at about the 241 to 280 level. I'm not saying to exit it. I'm just letting you know that is where there's a pretty decent amount of resistance. That is ticker symbol AXAS. The next one is XES. And on those a couple dollar stocks, I don't know. This one here is a $13 stock or $16 stock. But on that one, John, if you're looking to get in and you're looking to hold it for a longer term type trade out there, just take your risk, divide it by the price of the stock, make it an unexpired option, because that had longer term potential to get all the way back up to its highs out here. That might be the better way to play it if you're looking as an investment. Usually I say anything under $1 you would do that, but $1.81, that is close enough for me to say that's an additional way that you could trade that. You have to study the charts and try to figure out why it is you wanted to do that. But this happens to be the Spider S&P Oil and Gas Equipment and Services ETF. That is XES. And the question was, is this thing going to go ahead and pull back any further? The answer is, I would say if this can clear the 1629 level, we'll have to finish, we'll get back from break. If this can clear 1629, this is headed to 1672. And if it can ever get above 1799, this thing's going to head back to the $24 area. More likely than not, that's where it's headed. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So John had one more request, which was Marathon Oil. MRO is the ticker symbol. Now, Marathon Oil here right now, John, is up at, on the daily chart, is up at a what should be significant level of resistance. Hit it today. 1395 is the top of the box. The actual high today is 1395. Now, we say a significant level of resistance just simply because of the structure of this daily box out here that formed on the trading session of October 2nd. Center of the box, closer to the top. So it should be significant resistance. Volume-wise, we're testing a swing point from October 4th that had 14 million shares with light volume. So now you've got really two tools that tell us it's not going to be able to bust it through to the upside. Now, the question is 1337, and it hasn't even been able to get to 1337, does that really become the support area? If price can break below 1337, this is on Marathon Oil, then you've got a chance for it to get down to the 1221 level. We'll take a quick peek on my other chart. It's off screen right now. See if there's anything that I can just quickly identify. And the only thing that I can identify here that might make sense before Marathon Oil might peak would be that we would see it try to bust through one more time and go test that October 4th high, make a slightly higher high, and then get to wave number 7, which would be G on my screen out here. So I see that as another potential. But is it going to go higher? I wouldn't be taking a long trade in this now. On this equity. On the monthly chart, as a matter of fact, the top of the monthly box is 1396. So at this stage here, if it breaks and closes above that level of 1395, at this stage here, I would make it that little shooting star from the trading session of October 4th. That would be 1415. Then it is ready to bust out to the upside. And then to the upside, you'd be looking at getting back to the highs from December 2016. In the 19-ish type area for you. So wait for it to either bust out or let it try to pull back into that 1221-ish type level out there. So thanks for writing in. Hope that assists you with the oil sector, and just good for all of us, actually, to go take a look at that. See if anybody else had a request, because the request lines are open out here. And let's see, what do we have out here? We got nothing. We got nada. So let's go take a look at what do you want to take? Let's go take a look at gold. Where's gold headed to? No different than yesterday. Gold is headed to the price point that we gave you was 1317. You are at 1303.90 right now. Is there anything that has changed? No. Is there a little bit of resistance at 1305? Yes. What's the high been today? 1305. 1305.10 to be exact, and 1305.10 is a little bit of resistance, but I don't think it's the type of resistance that gold can't get through. Of course, if gold is going to get through it, it needs the help from your friend and mine, and those are the yen futures. As we take a look at yen futures here, this is the daily contract. There's nothing to suggest that it won't continue to move higher, and therefore that gold won't continue to move higher. With regard to gold, what we're going to have to really be watching like a hawk is, was that a bottom? The one from 2, 4, 5 days ago, as price was testing the bottom of the weekly market profile, or is this just a counter trend rally? And I do not know the answer, nor do you. But we will know the answer as its price oscillator, bottom panel, gets up to the 0 line. And then what we'll see is we will see an eventual test of price and Stevie's red line. It's at that point that you and I will be able to draw conclusions. Now, those conclusions are drawn, and we have, in a couple days, you can see things kind of shift around. We might get the bullish message one day, the bearish message the next. So there can be a little bit of shifting here. But eventually, you get the explosive move to the upside or the downside, and it just is very clear with regard to what it wants to do. At this stage here, that 1317 area, I don't remember what I gave you on the market profile side, but that is what it looks like to me. And then we'll have to sit back and assess, hey, Steve-O, what does gold want to do? A question in from the den. Steve, the yen chart, the price oscillator is also red, so why do you think it will go higher? I think that because price right now is above Stevie's red line, Dano, that's the reason. So what we have is we have inside the yen the counter trend rally signal. That's where you have the price oscillator moving higher when it's below 0. And specifically on the day when gold was hitting the bottom of its monthly profile level out here, that the yen formed a hammer candle. That was on the trading day of October 16th. Now, this hammer candle was coming down towards the bottom of this consolidation. And at that stage here, you got a hammer candle, a single candle, one of the more bullish candles out there. And there was, even though it did get down to the bottom of the consolidation, it was within the range. Within the range from back on July 11th, within the range from May 11th out here. So this suggests to me we're in a TD setup 9 count. Today is going to be count number 5. We should have 6, 7, 8, 9 successive days next week. And then from there, we'll go ahead and try to assess where things are at out here. But as I take a look at it, what my eyes see is that this wants to run higher, gold wants to run higher, Treasury bonds want to run higher out there. And the reason is because those three are correlated at the hip. And when we say at the hip, if we go take a look at our 10-minute chart, I just have to find it. Here, it's going to pop up on our screen, and you're going to see these three beauties. Earlier, I was inside the den this morning when gold took off, when bonds took off, and the question was, why did they take off? And my belief, my conclusion, my assumption is it's controlled by one thing and only one thing. It is not the U.S. dollar index. You can throw that sucker away when analyzing gold and Treasury bonds. And quite frankly, the stock market out here. Simply take a look at what the yen is doing. Take a look at that wide-ranging bar. You saw bonds follow up. You saw gold follow up. Yen, the currency pair. We're just taking a look at the futures. The reason is because the directional correlation. If we take a look at the yen US dollar, I've got to go ahead and invert that. And you know how I hate the word invert out there. I hate that word. And there's no reason for us to do it. Plus, here, I don't have any delay. Whereas if I look at the currency pair, I have the delay out here. So it's a beautiful thing, and it's really all about the yen. So, Danny, I see you say you understand. Thank you. You go, oh, that was Dudette who said that, but that is that's the reason. Oh, actually, it was Maria who asked the question. Sorry, Danny's stuff is right above that. So that's my take, and that take doesn't change until we start. At some point in time, that correlation is going to go away. It's just not on October 13th, Friday the 13th, no less out here. So that, as Tom likes to say, is a beautiful thing. So we've got about 20 seconds before we go to a hard break, and then I think we'll have about 2 minutes. I know there was a question yesterday that came in with regard to, will the IWM ever get back to its breakout areas? And I said that I would look at that, and I just remembered just now. When I went back and studied it further, I didn't see any open gaps out there. But don't be trading it as if it's going to get back all the way into the early 2016 timeframe anytime soon. Here's my response. It's headed much higher before it ever gets back to those levels. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Dow's up 46, S&P is up 5. Nothing is private in this world anymore. You can tell I had been on the internet searching for pain, reducing options out here, because the email I just got was living with pain. It has been a pain since Sunday, late Sunday afternoon out there. But in any event, instead of being a pain out here, let me give you kind of a short-term view as to what's going on in the market, what you should look for, what you can expect. Now, if we take a look at this 30-minute chart here for the NQ, we're going to see that price has been moving higher, moving on up, but doing less relative energy ever since the 12:30 time frame. We've got 6 minutes before we get into this 30-minute close, but looks like we're going to get a bearish reversal candle. So this looks like we're getting ready to top on a short-term basis inside the NQ. Now, the next level that price has to bust below is 60.9850. Yeah, Stevie's red line is just below that. We'll just call it 16.98 is level. If you see price below 60.98, this suggests that you should see price move down to about 60.87. 60.87 is 60.91. That should be support. Doesn't mean it will be support. It's not going to happen until price gets below Stevie's red line out there. But you're getting the type of topping signal, very much like we did yesterday. Yesterday, that was coming at the 12:30 time frame when price was moving higher. Had that nice little shooting star that formed, a little bit of follow through on the next session. And then as soon as price got below Stevie's red line, that took place at 2:30. Boom, voila, price went down to support. Now, support then was the bottom of that TAS market profile out there, and that level in essence held. Will today be a repeat? The answer is yeah, as long as it in progression does those exact same things out there. Testing Stevie's red line and rejecting it, that's nothing more than testing support out here. So we can do this on a short-term basis. We can do it on a long-term basis. We'll do it on any basis that you go ahead and give me the signals for. So, folks, I know the music is just around the corner. Stay tuned, because your favorite polar bear, the world's favorite polar bear, is up next. That's David White. After that, you got Tom O'Brien from 3 to 5. Have a great weekend. Hopefully I'll be with you on Monday, but if not, I'll be with you on Tuesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.